First off, I want to say that it is my opinion, and I do agree with the physical silver pundits about there is a conspiracy, if you want to use that word, to keep the price of silver down. Yeah, I know I have physical silver, and I'd like to believe that too. For just because I have physical silver, obviously, but just thinking in a rational manner, it's a great racket to have fiat currency. It's always been. If you're the guy that's issuing a fiat currency, you want to keep that racket going, and you don't want competition to it. Precious metals are competition to it. And that being said, I know we had these two big slam downs in silver, and silver prices have been recovering good the last month. Great, right? Well, the one thing I look at is, yeah, I do agree there's silver manipulation, and I do agree they're doing everything in their power to slam this down. This is a logarithmic chart going back all the way. But relatively speaking, the slam downs in 2011 were very hard. And considering this, a very important point, there wasn't like a Lehman Brothers and a Bear Stearns going on at the same time, and a financial calamity where everybody thought everything was going to fall apart like in 2008. That could bring down commodities, quite obviously. But what happened this time? It was 5 margin rate increases. And then, of course, they had to do margin rate increases here at the end of September again, even though silver wasn't really that high. They were afraid of gold. But then they had to do margin rate increases on platinum and palladium, which are not even performing well. That tells me I know what's going on. I know what's going on. They do not want people in the metals. They're trying to get them out of it. But what I would like to know is, conspiracy or not, rigged or not, slam downs or not, I'd love to know when the slam downs are. And obviously some people must know, because I don't want to keep saying this because, well, you know, and I'm not going to say I don't want to say too much about this, but he's the only guy I know that sold his silver, and he was a big guy. That was Eric Sprott. He sold his silver at the end of April, then he sold it a bunch in August 2011, and PSLV insiders were selling their silver, so people knew. They knew. It wasn't just mathematics. It wasn't just looking at the charts. They knew something was coming up. They knew. So, since I don't have inside information, what I'd like to do, and I think this makes a lot of, use some common sense, and I think this is a lot how Mark Farber makes his money too. He doesn't necessarily go by, every technical analysis there is, which I think there's a lot to that too. There is. But he's using like common sense, business sense. For instance, if something goes up to a high that it's never been at ever, or hasn't been near in a million years, like in case of silver, this would have been a no-brainer. And every single silver pundit out there was telling people to hold, that it was going to blast through, like Bob Chapman, for instance, and stuff like that. Now, my normal strategy is to sell in pieces when I get really good gains. Now, people tell me, you're leaving money on the table. Yeah, I know that. But I also don't know the future. But I think, and I just want to give out some good advice there. Yeah, well, let me put it this way. I don't think anybody on YouTube, there might be some people that know what the tops and bottoms are of these markets, but nobody on YouTube is going to be blabbering it around to a whole pile of users. That is a fact. That's a given, God-given fact, like it's a postulate and axiom. You're not going to get secret information blabbed out on the internet. Quite obvious. So what you should do, and I'm going to do, is sell in pieces. Now, I dumped a lot of my gains in 2011 that I actually had in 2010 because I didn't want to recognize them then. So that was one of my reasons I hold. And I was thinking, probably more likely the commodities will go recover in the end of 2011, and I'll dump them early 2012. That didn't happen. See, that's why I don't necessarily go with my normal strategy. My normal strategy is to do things in pieces. And I know that sounds ultra conservative, but it keeps you out of the garbage hype. I tell you, 99%. These people selling these stocks and all this financial advice knew what the hell they were doing. They wouldn't need to sell it. So I'm giving you some common sense advice here. When you secure gains and you got really good gains, I know you're going to hear one advice one way, you're going to hear one advice the other way. Secure some of your gains. And it's better to secure them on a day after you had a good day, and that's even when you don't want to sell it, because say something went up 5 or 8%, like silver does make those crazy moves, 5 or 8%. Say you're up to $60 and all of a sudden it jumped up to 5 or 8% more. That's a good time to get rid of a third of it, 20% of it, half of it, whatever. But do it in pieces. I think that's better overall strategy. Because, say for instance somebody was selling in here in pieces, they got up to 40. They sold some at 45. And, they started selling more for 47. And maybe they're holding about 40% of it when it dropped. You're in a lot better shape. You're in a lot better shape. That's what I think. And you're not going to get everything exactly right. But it's a much safer play. It is a much safer play. This was an older article on oil prices and oil volatility. And I heard it was under investigation back in the summer because, well, they closed down some refineries and they jacked up gas prices for that reason. But what was really going on was there was the spread between the WTI, which is the West Texas Intermediate that comes into Cushman. There was a glut of oil on the market coming down from Canada, and it wasn't getting into where most of the refineries were in the Gulf. So what was going on is people were actually paying gas for prices of gasoline, which was not based upon the West Texas. It's more based upon the Brent. They call that the light Louisiana crude, I think it's called, and that's the Brent price, the worldwide price, pretty much, with the prices that are coming out of Europe's paying and stuff like that. Usually the spread between the WTI and the Brent is like $1 or $2, but it was up to almost $30. So the refineries were making a big chunk of money because they're getting crude cheap, and they were charging for the Brent. So I think that was part of the investigation. It wasn't so much that the price of oil went up so much and stuff like that. But this article doesn't mention it too much. This was out of the Huffington Post from a while ago. But they're investigating volatility. And oil was like going up $10, down $10, up $10, down $10. Well, I think some of this information that Lindsey Williams gets isn't bad, but as far as paying attention to anything you base your decision on, what he says financially, he should be a small piece of it. That's what I say. And I can't believe this guy. I don't know how people would listen to this guy so much. I don't. I mean, I do and I don't. I do and I don't. But as far as oil prices, there's been a lot of choppiness in the prices, and that's where you can make your money. That's where you make your money. It seems to trade in a $10 range a lot of times, and when it hits the top of that $10 range, and it sinks down, and it does the same kind of pattern. A lot of times, there's pretty steep drops in the price of oil. Now this is a really long range chart, and what I was looking at here was, just how high oil was back in 2008. So, also how fast it fell. And I think this is what's going to happen when we have a war with Iran. So, you might want to do some very, very short-term trades on this stuff. I mean, if you see oil going up and I think it's going to go up not like this. I think it's going to follow like a pattern like this. That's what's going to. It's probably going to go up even faster than this. probably even faster than this. You know, this is a downward trend, but it's going to go up faster than this when there's a war with Iran. And you got to be, that's one reason to hold cash on the side, because I'm not sure if I'm going to be in it when this happens or mostly out of it. Because what I'm going to try to do is guess the ups and downs, and I'll probably keep a core position if I get it in around 95. That's what I'm going to do. I don't want to pay a lot of money for oil and keep a core position off of that kind of crap. I think that's BS. I want to get it cheaper because I don't think the demand is there right now. But if this war starts, when I say it is at one point in time, it's going to take a few months or so. If it happens on a weekend, that tells me that there's going to be inside guys that knew when that was going to happen, and that's basically to screw everybody else up. If it happens during a weekday, and you can actually, it happened, and then all of a sudden you can pull the trigger and ride on that curve upward, then you're in good. You're in good. But I got a feeling it's not going to happen like that. I think it's going to happen on a weekend, and that's one reason I want to keep a core position, but I don't want to spend money high for it. I want it to be cheap. I want it to be cheap. You know, so I'm hoping it drops down a little bit, and if it goes up to 100, I'm going to dump my oil position that I bought at around 96.50, which wasn't much, and I'm holding cash. I'm holding cash. I'm holding commodities, and I'm holding cash. So I'm actually just doing the stuff that I normally do. So that's what I'm going to do. But as far as these gold-silver ratio, I also want to point out that if you go back a lot of years, it really hasn't hit this kind of low of 31 or whatever the heck it is in a long, long time. I know they keep talking about this 15-to-1 left and right. You know, all the silver people, they talk about this 15-to-1 ratio, 10-to-1, 1-to-1, whatever. Like it's, you know, it's got to be there. Well, in recent history, going back a lot of years, it hasn't been nowhere near that. It's been more like way over 50-to-1. Way over that. And I know there's not enough above ground silver to invest in. I know all that stuff. But, you know, you start jacking up these prices and they'll find the silver. They'll mine it. So I'm looking at reality. I think maybe silver will go to the 15-to-1. Maybe it'll stay there forever. But it ain't going to happen right away. If it goes down to 30-to-1, I think it's, or maybe 28-to-1 or whatever, it's going to have a hard pullback. It's going to do the same garbage all over again. So I think that be careful about this, and be careful of some of the expectations these people are saying about 15-to-1, because 15-to-1 happened for a matter of hours back in 1979. They would have to make silver like a currency and monetize it again to do that. And do you think they're going to do that? No, they're not going to do that. I don't care, you know, who it is. It's not going to happen. And if it does happen, it's going to be far off in the future. So reality is right now. You want to make your money now. So I think, you know, silver did take a quick drop in the silver-gold ratio, which is great. This because silver actually went up about 20% in January, and gold went up about 11%. So the ratio dropped some, which is good. And also, if you're looking at the platinum ratio to gold, it's actually done a lot better. See, right now, gold is only 6% more than platinum. Back a couple months ago, gold was 15% more than platinum. So, you know, they're talking about gold went up 11% in a month. Well, platinum went up a lot faster. And same with palladium. So all the industrial metals, the silver-colored metals, silver, platinum, and palladium are doing well. And even in 1979, when silver had this super high explosion in price, same thing happened with platinum and palladium. The same thing. They all run together pretty much. When there's a hard bull market, they all run together. So, you know, it's a matter of knowing how the markets are going to go and when you're going to hit these kind of drops. So I'm going to say right now, if I want to give some good advice out there, is say silver breaks $50. I don't know. Maybe you want to sell a little. If you got to eat the PSLV, maybe you want to sell a tiny bit of it. I think most of my sell on PSLV is going to be around 60. But I'm going to do things in pieces. And if I see like a very, very good day where silver moved up in a crazy amount, like 10% in one day, I'll sell more and be ready to move back in a little bit on the next day if it drops back 3 or 4%. That type of stuff. So I think it's, you're not going to pull the trigger all at once and try to guess this absolute high. I don't think you're going to be able to do it. So my strategies and my advice is to do things in pieces, especially on, look at an overall price and also look for an extra good day. That's going to be the day you don't want to sell any because you're looking at it and you're thinking, wow, it's going up, it's going up. Well, that's the day you should sell a small portion of it and do things in pieces. It's a hell of a lot safer. Don't listen to everybody out there because, if silver was even $100 an ounce, say it got to $100 an ounce, I don't know what the hell it is, people would be telling you it's going to be 200. No matter how high it goes, there's a crowd out there that's behind silver will tell you it's going to go higher. And they're wrong. They're wrong. You're better off securing profits in pieces. Believe me, that's a good strategy.